All right, everyone. So, welcome to the live stream. I'm Victor H with Victor H Investing, and this is the very first interview that I'm going to do. I hope to interview a lot of people from veteran investors to just typical investors that can kind of share where they're at in their journey. But I'm really fortunate to have Scott with Scott's Due Diligence on with me. He's a guy that I've been watching for 4 years, and I really appreciate the content he's put out on YouTube. And I think the way that he covers companies is a way that I was able to, learn so much from, and I actually created my modeling with a lot of his insight, put into it as a main ingredient. What I wanted to do is kind of go through and interview Scott so you can get a perspective of his background from an education standpoint, investing background. And I believe in process. I believe if you have a process to invest or whatever you're doing in life, let's say you're cooking and you want to become a better cook. Well, if you write down your recipe and you say, hey, I'm going to make a really good salmon and I'm going to season it this way and I'm going to cook it in that way. You write it down and then you taste it when it's done. You go, well, maybe it came out a little too salty. So you note that and you take less, next time you cook it with less salt. And each time you can improve the recipe. And that's really having a process of, hey, document what you're going to do and then continue to improve. I'd love to hear how Scott goes about his strategy, his process, how he measures, and then how over time he improves. So before I go into it, Scott, how you doing today?
Good. Thanks for having me on. It's if ever, how many viewers? I can't see.
We've got one viewer so far. Might be a few minutes before we get more.
Yeah. I don't see it on my screen, which is odd. But yeah, if anybody's watching this now or going to be watching it on the tape version, put yourself out there. Like this is not, I'm not great in front of the camera. I don't feel like I have an amazing personality and I get a little nervous, but like I just started making videos and you don't have to go to that level, of course, but you learn so much more when you try to just be active, like maybe be on Victor's live stream or, put yourself out there and then take risks, because if you just stay within your comfort zone, you never really learn. Talk to people, ask people questions. And that's just the only way to evolve.
Cool.
Neil, what's up? Thanks for joining.
We got Neil on. Thanks for commenting, Neil. So let me start off with just a couple of just background questions. Can you tell us about your educational background and maybe your employment background that kind of aligns with your investing?
So I grew up in New York City. I currently live in California, but after high school I stayed in New York because financial reasons. If you stay, it's kind of like if you're in California, I know a lot of people who go to the UC schools because it's a lot cheaper if you live in state. So I stayed in New York. I went to Buffalo for undergrad, and I was so excited to start working. So it was kind of like an obstacle college before working. I definitely think it's important. Not that I don't think I learned that much in college, but I think it just shows that you can get through it and you do meet people, things like that. But I was so excited to start working, make money, and be rich and all that stuff. And then when I started working, I realized it's not as exciting as I thought it was going to be or as easy. But you just gotta you gotta grind. You gotta figure it out, because people ask me all the time, like, how did you get so good at like reading financial statements? and no one showed me. It's not like I sat down with a tutor every week and they showed me. It's just kind of like picking up little by little each time. Watching.
So let me ask you on put yourself back when you're recent graduate, or maybe you're a senior in college. You know, were you into investing at that time? Did you have any particular, I guess, people you looked up to, or maybe aspired to be like those people that were investors?
Yeah. So all I thought about as a kid was money. So I had always trying to, like, as a paper boy. So I was into stocks in like, I think 10th grade. I kind of got into it. Ashley, what's up? Thanks for joining. So, because anything related to money, making money. So stocks. So I didn't really do much. It's not like I did any. I mean, I wish I knew how to do due diligence, but I just looked at the stocks each day and how much they were trading for. But I was fortunate enough to, like my first year of college, I went to the local community college in Staten Island before I transferred to Buffalo, financial reasons. But I was fortunate enough. I worked at Credit Suisse First Boston in the World Trade Center for my first year in college. So I was interning there. Ironically, I started right when they got bombed in '93. So it's very easy to remember when I started there, because as soon as I started, they got bombed. But that was a small one. Only 8 people died. Right. It wasn't like 2001.
The garage got bombed. That was before the airplane.
I think in One World Trade Center. So I was in 5 World Trade Center. So we weren't really affected too much besides evacuating. But I guess that's a different stream to talk about that. But so I was really fortunate that I got that internship, and I was working in their, I mean, I didn't really know. Like it was just a lot of grunt work, just doing like a lot of spreadsheets, things like that. But it was cool because I could open up a trading account, and I wouldn't have known how to do that in '93. I think it was '94, because there was no like websites to do that. Right. So, and it wasn't really that easy to figure out. And so
my first account actually physically went to an office, and it was around '94, and like old school, fill out this form, sign it, driver's license. It was like so 1950. And I started a brokerage account, and it was so expensive to do one stinking trade that it was really high pressure to, have to pick the right one, because I was paying $25 or $30 a trade at that time. That's a lot of money in mid '90s. So I don't know what your experience was.
That's funny. That's exactly. I was fortunate enough. I was working on like the 7th floor, and the trading desk was on the 8th floor. So I just put it in an inter-office envelope when I set it up, and the clerk would come and pick it up and bring it to the trading floor. So it was pretty easy to do since I worked there. I don't think I paid for trades, because I think that was one of the benefits of working there. Because I would have remembered that. But I bought Nordstrom, and it wasn't like I really knew. I just overheard somebody talking about it. Whatever I overheard, like the senior people talking about, is what I bought. It wasn't much strategy, but it always seemed to work, because so I started. That was my first trade, but I didn't really get into trading. I mean, I kind of followed it throughout college. Then when I graduated college in '98, and then I opened up an E-Trade account in '99, and I just walked over to E-Trade, because I was in Midtown at that point. So I just walked over to E-Trade, gave him a check. It's a lot different now. And then and that's when I started. but I didn't really have much money. Like when you look at like Buffett's like net worth, 90, I think like 90 or 99% of his net worth came within the past 10 years, like after he was 50, something like that.
Agreed.
I mean, it's still he went from $1 billion to $100 billion. It's not like $1 billion at 30. He was struggling, but so I went from like, I mean, I had hardly anything because I wasn't making that much money, but it accumulates. So don't think. A lot of people say, oh, "What's the point putting $100 a month into an investment account? It's not gonna." And it takes years to be worth anything, but it worked. I put in $100 a month, and then when I got a better job, a few $100s a month. Then when I got a better job, it kept going up, and it compounds. So yeah, I just started off like with my 401k at my job, and then I did a lot of things like options. Because it was cool. I was learning it. But I think the best strategy is just to.
So you were Roaring Kitty before that guy was anything. You were Roaring Kitty 30 years ago.
Yeah, well, probably when he was born is when I was like getting into it, and it was fun. And I wouldn't recommend to do what I did, but I would like put all my money into one stock. I would. It wasn't like that much money, a few thousand. I would like do a lot of like different crazy things, but it was just a learning experience. Now I would never do that. Maybe I'll do a few $100s, but I'm not going to put half my portfolio in these risky trades. But you got to learn. The only way to learn is to like be part of it. You're never going to learn if you just watch people talk about it. Because most of the people that talk about it, especially on YouTube, I don't think that they know that much. Because I listen to some of the people who have millions of subs, and I'm like, I don't learn anything. And I'm not saying they're bad.
There's I think there's a lot of lifestyle videos. Like, hey, look at me. I got a fancy car, or this is maybe the outcome lifestyle that everybody wants. Listen to me. Hey, I could repeat all the news. Listen to me. That's, and you know what? Everybody has a choice to view whatever they want. So I appreciate your channel because you went deep and you went, okay, let's talk modeling. My background, I graduated in accounting and I really liked software in college, but I liked accounting as well. And I started modeling early in my career. So when I started getting my head around your models and, I have an MBA and have a sense of, what value is, I was able to create my model. That's the kind of video that I think was really attractive to me. So I would have you on my list. I would have like Cameron Stewart on my list. I'd have these guys that would really go deep. So I appreciate what you did. And I totally get what you're talking about. So looking at, what type of investor are you? Are you a value investor? Are you a growth oriented investor? What are you?
I definitely, long-term is the way to go. So yeah, now that I'm in my 40s, I'm a buy and hold. If I didn't move brokerage accounts, because I did have some money, some of my stuff would be like 15 years. I would have it for 15 plus years, but I moved brokerage accounts in 2017. So I took all my retirement from my old, and so from 2017, the same 4 trades I bought, which are Meta, Berkshire Hathaway, Spiders, and some other ETF. So yeah, I'm a buy and hold kind of person. That doesn't mean people say, well, what if I buy and I lose? It's a bad investment. I lose most of my money, or I can never sell it. I'm like, of course I sell. I sold Intel last year. I just, when I lose faith in a company, I sell it. And if usually when I buy a stock, it's a long-term thing. And it's rare that I see something else that I really, really want. Like Netflix, it came down a lot. And I really wanted Netflix for a while. So I sold out of something, but that other stock I didn't really like. It was a risky trade. It was a bad trade. I lost a lot of money. But like I was just telling my wife, it was in her account. I did this, so I kind of feel bad. But I put like 90K into Waiter, that SPAC. It's now called ASAP. It's like Uber Eats, but they just do food delivery. And it went down to like, ironically, it went up to like 120K within the first month because I think Morgan Stanley put a position in, and I didn't sell it, and I sold it at 30K, so it went from 90 to 30. Now it would be worth like $1,000 maybe because it's gone down so much. But I took that 30K, put it into Netflix, and I'm fortunate now that Netflix I'm getting close to my original investment because I'm up like 60% of my Netflix.
Great.
But yeah, but long term, you don't try to time the market. I feel the best time to invest is when you have money. There's not like a perfect time. Don't sit and wait all day to find a perfect time to go in. Just go in and hold long term. If you try to time the market, I don't think you're going to ever figure it out. It's just, and if you get lucky once or twice timing it, you're probably going to get unlucky other times by not.
So let me provide a few comments, kind of jumping off points on, I guess how I look at things. So first, I totally agree that, I guess saving up, and another label for it is creating your own wealth, is a long-term mission, right? And you go to work and you start working and you start making more money than you need. Putting that money away is a really good idea. Put as much as you can and try to make it, a routine where, you're putting it away. Hey, you had a really good month or a couple of string of 3 months, put it away. And it really, once you created a pretty substantial, I guess, pool of funds, then you've got something. But there's one concept that I've always, and I should say, I hear repeatedly, buy and hold forever. So let's just kind of walk through that. And the point I'm going to make is it's too stressful for me to think 30 years at a time. Like, hey, I'm going to buy today. I believe CVS is a really good investment. So I'm going to put $100,000 and I'm not going to sell it for 30 years. That's just too much. Now, what I like thinking is I wouldn't mind owning CVS for the next 30 years, unless their business falters, unless, their management team starts doing just dumb things, unless something disrupts the market. Like all of a sudden, some new way of getting your pharmaceuticals, getting healthcare. If that disrupts their business model, that may happen in year 7, 8, 9. I reassess, and I may have to sell CVS. I may have to buy more because you know what? CVS is even stronger than I thought. So I agree with the long-term mission. I agree that, hey, buy companies that I really believe in and that are going to be around, conceptually forever. But I don't kid myself. Like when I was 25, I bought Disney. I thought Disney was a great company. I was right. There's nothing wrong in that statement. It's a very good company.
Well, when did you buy Disney?
I lost a lot of money because it was at the height of Michael Eisner's reign. They were like the most valuable company. They were the Apple of that era. And then, holy smokes, it just started to go down and I lost a lot of money. Now, I don't own Disney right now. I guess we're 30 years later. I don't own it, and I wouldn't own it right now. I believe that the business is really upside down. They've got a lot of problems and so forth. So that, again, we all invest the way it fits our unique situations, our personalities and so forth. But I wanted to add color there because I found it incredibly stressful or overwhelming to think, oh, I got to make a decision and then own it for 30 years. No, I have a long-term mission in mind. But if in 3 months later, the management team, just to use a really ridiculous example, let's say the CEO was caught, doing something illegal, and it's now everybody realizes that he was embezzling money. Okay, that's going to change the whole picture because a bad management team can ruin a good company.
Yeah.
So with that, if that happened 3 months later, I would have to reassess and say, I don't believe in that company anymore. I need to get out of that stock.
I think I got a good analogy. I was thinking of like when you explained that. Think of it as going into a marriage. Like you shouldn't think of going to a marriage as like a short-term thing. You should think of it as for the long haul. But things happen, and you don't know how stuff will change. It may be not you changing, it may be them changing. So sometimes you have to pivot. If you're miserable in a marriage, sometimes it doesn't work. But go into it with a long-term. But of course you can change. You can sell a stock. But if you're not, yeah. But I think majority of the time, if you're selling stocks within a year, you're probably not picking the right stocks, or you're just not good at like waiting. You're too antsy. But yeah, it was tough. Like I bought a lot of Meta when I sold my business, and I was down 70%. I didn't buy it at the peak because Meta was down. It was 380 at the peak, and then it went down to like 320, and I bought it at 320. I'm like, wow, Meta's 15% off, and I was down so much, but I went into it knowing the long term of the company, and I'm glad I didn't get scared, and now I'm up like 50-60%. But like I said, Intel, I just lost faith, and it ended up going up a lot. And I remember somebody on my stream was like, "Are you upset you didn't keep your Intel?" And I said, "No. I mean, I made a decision. I could have sold Meta, but I sold Intel instead. And now it's coming back down Intel, so I feel better." Isn't it funny? Like when you don't own a stock, I love seeing Nvidia come down. I'm like, oh yes, Nvidia is going down. Just like when Tesla was so high, and I'm like, it would piss me off when it went up, and I would be so happy when it goes down.
Right.
So it's tough because you feel like an idiot, and I feel like a bigger idiot because I'm here saying, oh, I know so much about stocks, and listen to me, and then I'm down 70% on my Meta. So like I feel like an idiot. Like,
yeah, 2022 really was a test, right? Because every company that's a great company was discounted, but the whole I guess the sentiment was negative after day after day after day, and buying into stocks at that era, obviously hindsight's 2020. It was a great opportunity, but that's where, like Warren Buffett says, until you are emotionally ready to be an investor, meaning you're going to get beat up, you're going to get run over, and you have to know that the worst times emotionally are the best times. You have to almost like be a contrarian in emotion and realize that if 99 out of 100 people hate a company and you're seeing tremendous cash flow, you're seeing a business that has very good barriers to entry, you're seeing Meta basically, and everybody's saying, oh, Zuckerberg's an idiot. He's the metaverse. What an idiot. That idiot at 18 figured out social networking. So, he's a genius. Okay. So as people piled on, it was like, no, this will come back. Meta is the leader in social apps. If you consider that, I forgot the number. Is it 3 or 4 billion with a B people have an account with Facebook, WhatsApp, Instagram, one of the above. So now that we have AI, they have billions of people. Like my wife started getting the AI app on her Facebook and she's playing around with it. That's going to be huge. So back to 2022, it's a great story or era that we have to keep repeating, because there will be another time when everything's going to be horrible, and we have to like keep the message going where it's like, this is a great time to buy. If you can pick up some extra hours at work, or maybe tighten the belt somehow and pour more money. I know it feels like you're throwing money into a bonfire, but 2022 teaches us that, boy, if you would have bought Meta, I think it got into the 80s, and now 400 and some odd dollars a year and a half later.
But the people love buying stocks that are at their all-time highs. They love it. They love paying for stocks when they're all-time highs, and they hate buying stocks when they're at their lows. And that's when people say like, "Oh, why are you successful? Why did you make a lot of money in the market?" And I know I would never. I don't think like that, but I don't think I can, because the market is pretty efficient. Like the information out there, you don't have to do anything. Just buy the S&P index. And I think the only thing I think I'm better than most people, the average person, the only thing, it's nothing to do with financials, and the only is that I generally, not always, but generally don't buy at the wrong times and don't sell at the wrong times. That's really the only thing I think I can do better than the average investor, because I can wait, and I understand. It's kind of like my marriage analogy. If you have a bad fight, you don't get divorced. I mean, you may. That's crazy. Sometimes you go a year of fighting in America. You have to look at the long term. You have to realize. Same thing with investing. If you went into it, the company, you liked it, and nothing changed fundamentally with the company. You like the business model. You like their cash flows. Nothing changed. The only thing that changed is the market is now, for some reason, pessimistic about the company. Then you hold. But if the flip side, like a company like Tesla, I never saw the value. It is a good company, but it's not like $1 trillion company. I never saw that value, so I never bought it.
And what's cool about, like, you just made that statement, and from a credibility standpoint, I or anybody else can go on your channel, look at the history, search Tesla. What did Scott say about Tesla a year ago, 2 years ago? You can do that the same with me. Like, what was I saying about Tesla 6 months ago, a year ago? And I was saying basically what you're saying is, I view Tesla as a car company. A lot of investors view it as a technology company, and they're not.
They're not.
Alphabet is a technology company. They create Google search. They don't have to create any tangible product. Tesla does. Imagine how many parts go into a car, thousands. It could be recalled. They could have somebody die on the road from an accident. I mean, all of the above, right? And I said similar things, and that's what I think from a credibility check, I could definitely, respect your opinion, because I can go back and say, this is what he said. And maybe you said something 2 years ago and the theme has changed, or maybe the way they do business has changed. I am on record on Meta. I've got 6 or 8 videos on Meta, and some of them in 2022. I continue to believe. And I kind of felt crazy when I was making those videos going, I don't know why the world hates this company. I think it's overdone. Yeah, the metaverse was not good, because I even bought an Oculus headset for my son at that time. I put it on and it was not my bag. It was like too isolating. And I can understand people not wanting to wear this thing. It's just kind of keeps you away from the rest of, civilization and your family and everything. So long story short, that's an interesting conversation piece. Let me put you on the spot and ask, is there a company you can think of, and maybe everybody online, I'd love to see your comments. Is there a company out there that Mr. Market, the average person, investing, hates? but they're very valuable. It's a company that everybody hates, but the intrinsic value is there. They make lots of free cash. They have a business model that is worth a lot, but everybody hates them right now. What company comes to mind under those conditions?
NVIDIA?
Everybody hates NVIDIA?
No, but I don't think they hate it, but that was.
No, I'm saying like something that's undervalued. It's hated and it's super undervalued, similar to the Meta example in 2022.
Well, Baba, but are you talking about?
That's a good example. Let's run with that one. I think Baba, I agree with you. Baba's a good example where if you look at their performance, it's like they're solid. You weigh their value. It's a very valuable company. But the fact that they're in China and there's all that geopolitical tension, it keeps them really discounted. And it's been a weird kind of valuation for me because I value them over and over again. I'm like, they're discounted. They're discounted. I buy the stock and the stock doesn't move as well. Although recently it's been rallying. It's kind of been a loser for me.
Can you give me 2 minutes? Sorry. Yeah. I'll be right back.
Yeah, no problem. So let me catch up on the comments. So is there a company that comes to mind, perhaps psychologically high prices conflated with high-end products like Gucci? All right. Probably needs you in Intel. All right. So you guys want to talk about Intel? All right, cool. That's a very good example. When Scott gets back, let's kind of look into Intel. And we're going to get into Intel. And I like Mike B, set up auto investing, $250 every 2 weeks. Very good plan. I used to, so I started investing, or I guess saving up, call it mid-20s, and I never stopped. And it was a really good plan because then you have a pretty good pool of just equity to, really start investing and making bigger bets, with your investments. And some of those paid off for me. Some of the stocks, but I also invested in real estate. I wouldn't have been able to invest in real estate if I hadn't done what Mike's talking about, is kind of start auto investing. I was able to get, in California, real estate's really expensive. So I think my first investment, I needed to, get $50,000 in order in 2010. And I had it and I invested it. And then I invested in another property a year later. I had to get $60,000 in order. No problem. Invested it. But it was no problem because 20 years before then, I was putting in my $200 a month, $500 when I had bonuses. And then I was able to accumulate that. So good stuff. All right. So we have, Scott, we have a nomination on a company that is hated, but maybe discounted. And that company is Intel. What comes to mind as you hear Intel might be unappreciated, but very valuable?
Yeah, I lost about, anytime you lose on a stock, you hate them, no matter what. Just like you were mentioning earlier with Disney, you'll probably never. I lost a lot with Intel.
Once bitten, twice shy, right?
Yeah. And I totally didn't understand semiconductors as well. I didn't realize how important they were, semiconductor chips. I mean, maybe I was ignorant, but I didn't realize how many things they go into. And I just think of I didn't realize also how much better NVIDIA's is compared to others, and how because it's kind of like a car. I totally get a car, like a BMW is better than a Camry, but I mean, I just generally thought of it as you have your $20,000, $30,000 cars, and they're all pretty much similar. Then you have your $50,000+ cars, but NVIDIA just really perfected it somehow. And
yeah, and I think Well, the Intel versus NVIDIA, I would say that, so NVIDIA creates GPUs, graphical processing units, and these were created to help gamers with their graphics. And what they realized was it was also really good for Bitcoin mining. So if you recall, like 5 years ago, GPUs were in demand to do Bitcoin mining. And as we started to build out the AI large language models, GPUs can do that large language model training far faster than a traditional semiconductor. And that's why they became incredibly in high demand. But it's going to be, in my opinion, it's going to be a short-term peak, because once you build it, it's the demand isn't going to persist. Also, all NVIDIA's competitors are working around the clock trying to create their GPUs that can compete with them. But we'll see what happens there. Let's turn our attention to Intel. I'm showing my evaluation of Intel. I have a video on my channel. It's a little bit aged. I guess it's coming up on a month. And I have Intel discounted at 69%. Now,
I think,
the story on Intel, the thing I do like, because Intel has been kind of Intel was Apple 25 years ago. They were the company in semiconductors. The PC build out was built on Intel's chips, and they're huge. So when it comes to PCs, they're number one, just units all over the world. Now they're trying to make a comeback and then trying to build onshore factories for the semiconductors, foundries. And I think if they can pull that off, it's going to be a strategic advantage. Right now, the number one foundry is Taiwan Semiconductor, and they're the number one player. They're a huge market cap. Now, the problem with Taiwan Semiconductor that I see is they're in Taiwan, and the government of China believes that Taiwan is a part of China. And I don't know when it's going to become far more tenuous. Like China says, hey, you know what? We're taking over Taiwan, similar but different to what Russia is doing with Ukraine, which is terrible. But if that event were to happen where China says we're taking over Taiwan, what's going to happen to TSM? It's going to be very damaging. And if Intel has an onshore foundry, then obviously all the demand that is like critical is going to go to Intel. So I see that as potentially a really positive thing for Intel. I think it's worth a bet. So I put like, I don't know, $7,000 into Intel. So far, it's not working for me, but I think this is a nomination for a company that's hated, disliked, unappreciated, unpopular, but has a lot of value, because historically, if you look at their cash flows, historically, they're just a cash flow machine. But recently, they're terrible. See, look at like going back to 2019, 17 billion free cash flow, 18, 14 billion, 17, 10 billion, 16, 12 billion, 11 billion. So when you look at this cash flow, and if they can get back to that heyday, this stock should be a $300 to $500 million market cap, if not bigger.
It's if it wasn't for Intel, like, we wouldn't have advanced computers as much as we did, because it was not just Microsoft that was the reason, and IBM. It was IBM made the computers, Microsoft made the software, and that doesn't make a computer. You need the processing, the chips. That's to do. So they were the key, and they were part of the PC boom in the late 90s, early 2000s, and everybody had to get a computer in their home. I didn't grow up with a computer in my home. I got one when I was in high school in the early 90s when it came out. So they were huge. Every other semiconductor company beneath them, you could sum up their market caps, and Intel was still bigger than all of them combined. And that lasted probably a good 10, 15 years. And up until just a year ago, they were still the biggest revenue generating semiconductor company. Up until like 2 years ago, they generated more revenue than anyone else.
And let me show you an interesting graph. I've done this before, but so Intel in 1999, they were basically NVIDIA. They're like, oh my God, there's going to be so much demand for PCs, which is factually correct. Yes, there's going to be a lot of interest in it. But if you look at their stock price, they went parabolic because everybody thought, boy, everything's going to have Intel semiconductors. You'll have a cereal box and it'll have a, Intel semiconductor. You'll have a toaster. It just got ridiculous. So their stock peaked at like $73 a share. It's never gotten back to that level. And I happen to believe that if you look at the NVIDIA parabolic graph, it's achieving this, and the investors will lose a lot of money, and it'll take a long time, if ever, to get back to the stock price. So this is kind of repeating itself, right? What's the saying that history doesn't repeat itself, but it certainly rhymes. And
right. Yeah.
I think that's what we're seeing in
Yeah,
NVIDIA.
That's interesting. Yeah, that is exactly how NVIDIA looks.
I'll open up
25 years
NVIDIA
later.
real quick, and we'll compare the two graphs, and you'll see that you're seeing the front end of that parabolic move in NVIDIA. And so here's NVIDIA. Let me try to break these apart.
Everybody's going to say, but it's different. It's different.
But it's different until it's not, until people lose, a pretty good chunk of money. And then see the parabolic move. Here's the parabolic move. And you're seeing already, see how it had a really drastic dip? You're already seeing the fear in investors. All the smart or I shouldn't use the word smart, big investors, hedge fund managers, they've trimmed their position in NVIDIA. They're basically saying, okay, I'm up 4x on my investment. I'll sell half of it, and I'm playing with the house's money. Okay, that makes sense to me. That makes total sense, which is I'm still in the stock, but I already made money on it. But once the jig is up, especially, I believe that semiconductors are cyclical, and nobody would argue with me that knows semiconductors. Once they show that, hey, in 26, we're not going to have the same demand, or 27, because data centers would have been built out. It's kind of like the railroad. You only have to, create it once from Los Angeles to Kansas City. It's not like you're going to build railroad tracks every year from Los Angeles to Kansas City. So once you've built that infrastructure, you're done. You may have to maintain it, but you don't have to lay down the rail system from Los Angeles to Kansas City every single year. No. So infrastructure build outs like NVIDIA is doing is a one-time event to do AI large language models. And at some point, it's going to start fading.
Yeah, you hear that, everybody? Short NVIDIA.
I didn't say that.
No, I know. Intel, I mean, I do see a chance it could blow up again. The thing, I don't know. I don't like that they were like, there's the foundry business, who's Taiwan has a lock on a foundry business, and there's the fabless. NVIDIA has a lock on fabless right now. Fabrication is manufacturing. That's what fabrication means. And so they're fabless. They don't do manufacturing.
Well, Broadcom has the same model. Broadcom is a fabless, and Broadcom's doing really well.
Yeah, there's a lot of fabless. You can have lots and lots of fabless, but you can't have lots and lots of foundries. You could, but I mean, Taiwan can handle all the business for all these fabless. But Intel's trying to do both. They're trying to be fabless and foundry, and I think that's a tough thing to do, especially in the U.S. Because if everybody knows that you don't really buy in the U.S. or manufacture in the U.S., it's just so expensive. I know it's a good idea too, because we want to create jobs, things like that. But if you want to be competitive in any field, like Apple can't make iPhones in the U.S. It just they would cost like $5,000 each. Like they have to outsource. It's just so expensive. Not the labor is extremely expensive relative to other countries, but there's also a lot of like beyond the labor too. There's a lot of other expenses that go into it.
Yeah,
so
it could be, but here's my observation on semiconductors is the amount of people on the production floor is not a lot, and it's a clean room environment, right? So you have a few people and you have these super expensive machines, but made by ASML. Okay. So you may have this really expensive machine. I forget how much they cost, but they're really expensive.
Yeah, millions.
Whether you're operating it in Ohio, which is where Intel is creating one of their factories, or in Taiwan, that machine costs the same. It's coming from Holland, I believe.
Yeah.
All right. So you have that cost, which is the same. And now
Amsterdam, is that? Yeah.
ASML, the company creates the machine that is actually
they're a Dutch company
that creates semiconductors.
Netherlands, right? Netherlands, I think.
Correct. Yeah.
Yeah.
Yeah. I said Holland, Netherlands. So my observation is that there's probably some regulatory hurdles to do manufacturing in the U.S. There's probably an increase or a higher labor rate, but that's not the big cost. The big cost is the actual engineering behind the design of the semiconductor, the engineering behind the semiconductor, and then those machines are basically creating the semiconductor. And the people that are in the production floor, they're maintaining the machines. It's not like they're assembling cars and you need 1,000 people in the factory to assemble cars. No, you need like 5 people in the production floor. So we'll see how it sorts itself out. But, again, the tension with the China, we've seen what it's done to the BABA stock and it's held it back. Now we have tension with what's the short form video company? I'm drawing a blank. The videos. No, the short form videos. Anyway,
Tinder?
No. TikTok, the TikTok video thing. It's getting banned here in the US, and that's tension related to China. So if China invades or takes over Taiwan, because I don't know how they classify that Taiwan's part of China, what will it do to TSM? I think it's a big risk item. I owned TSM for about 3 years. I did really well with TSM. I think they're great. But it was always a concern that I had, which was, if China ever woke up and said, you know what, we're taking Taiwan back, what would it do to TSM? Would the U.S. automatically say, okay, you can't import these types of semiconductors from TSM because we're afraid China's putting in some kind of source code to do some, to do something, espionage or something. But we'll see. All right, catching up on some. So we got some comments on Intel. Avoid it. Snowflake. Thanks for checking in. We have somebody who bought Tesla. So we've got. So Kathy Wood is. Man, I'd be curious to hear what you think of Kathy Wood. What do you think of Kathy Wood and her investments?
No, she's really smart. She takes risks, that's for sure. She's not a Buffett type person where she's just looking for like amazing value. She's willing to put money into stocks well before they prove anything. And I don't know. I know she was doing amazing when Tesla was through the roof, but I'm not sure if she's up anymore in ARK. But you got to be impressed with. I know everybody like, she's an idiot or he's an idiot. But it's hard to say you're an idiot when you're talking about billionaires. I can understand what's his name, an idiot. Jim
Cramer,
because he's an entertainer. He's not really like Kathy Wood is she's investing. She's in the trenches. So entertainers, who are not really investors, like I don't really listen to them as much. But how is she doing? Okay, so she's back down to where.
I mean, it's brutal. And let me share my observation on Cathie Woods. And so I think as an investor, here's some free advice, everybody. Be selective of who you listen to, right? I listen to Scott from especially a structural perspective on how he values a company. Cathie Woods, it's some of these high profile investors, they're looking for that one time when they were right. And she was right about Tesla temporarily, and she rode that. Oh my God, she was right when everybody else was doubting her. Yeah, you know what? That's right. But since then, she's been really wrong. I mean, look at these returns.
She sold NVIDIA before it blew up.
Here's what I want to point out. In 2023, the market, the S&P is up 20 some odd %. Her fund did nothing. In 24, the S&P is doing really well. Her fund's doing nothing. So again, I get Cathie Woods. She wants to be right a few times and then ride that for as long as it'll take her. I don't listen to Cathie Woods. The person who's been right recently is Tom Lee. I think he was right, in a lot of ways. And then if you look at even the great investors, they're only good for a short period of time. Probably a very good run was Peter Lynch. He was like on fire for like 5 years. And then after that, I think he retired, but then he was done and it was over. So I think that, I would not listen to Cathie Woods. Me personally, I'm like, all right, whatever she says, I don't even want to listen to it because I'm probably a contrarian to anything she says. I would do the opposite. Right. I do my own analysis. I don't want it to like cloud my judgment and, hey, I hate everything she does. So that's my opinion on Cathie Woods.
Yeah, right. I don't really listen to anyone. I mean, I'll listen, but I won't like do exactly what they say. But you should always listen to people, and then maybe parts of what they say you use as your own. But the only person I really always respect is Buffett. But he's only one. Everyone else, I don't really.
I ditto that. Here's a credibility check. I think he's taken a bath on Warner Brothers Discovery, right? That was a huge loss in 2023. They got out of that position and then they reported it. He lost a ton of money and he stepped out there and said, that was my decision. I take 100% of the blame. It's me. You seldom hear that from one of these super investors. They're always trying to spin it and say, well, it's going to come back, or, oh, it's misunderstood, or they don't talk about it. But Buffett's like putting it out there and saying, hey, you know what? That one didn't work. It's my fault. Nobody else to blame. And we're going to process that through but he has so much credibility because he's been right so many other times. Yeah, I agree with you that I listen to Buffett, not on everything. His investment in Apple was brilliant early, but Apple, I'm not big into Apple right now. I think it's way overpriced. Yeah. Well, it was overpriced for a while, and now it's, I think, fairly priced.
Yeah.
Right.
Yeah.
So let's turn our attention to Zim. That came in the comments. Recently, they've done really well. It looks like from April 18th to right now, it's up 89%. That's a pretty nice little move in 1 month.
Wow.
And this is the whole shipping rate are going to implode, which I agree. Shipping rates are not going to be what they were 2 years ago, but they weren't going to go down to zero. And I think investors are realizing, oh, well, they are going to be paid something to move cargo from, one port to another. And I believe they're going to announce earnings. When are they announcing earnings? I think they announced this week, and this stock has already seen a huge rise. And they announced on the 21st, which is Tuesday, If they announce positive earnings, this thing will go up like 30% in a day. We'll see.
Yeah, it was such a hot stock, and I think it came out. I think it IPO'd in 2021.
Yep.
They were paying like 50-60% dividend yields, and they were paying it. It wasn't like it's kind of like when you get into
a container. To give you an example, a container in this era of 2022 with the supply chain constraints, a container you were having to pay like $12,000 to ship it from China to LA. Now you're paying like $1,000. So 2.5 years ago, they were making just so much money per container, and now it's basically a 20%, because shipping rates are actually around $2,000 to get a container from China to LA now. So they had that big drop. Now the market said, yeah, it's a bad investment, and it kept going down and down and down. And it got to a point where what's the term that Buffett uses? Or no, it wasn't Buffett. It was his mentor, Ben Graham would say a cigarette butt that still had some additional puffs left. And I bought into the stock thinking it's overdone. The market hates it, but I think there's value there because I'm seeing that they renewed their ships, and I actually think they're really discounted. So we'll see where it ends up.
Yeah, it's a pretty extreme stock. If you're into marine shipping, it hasn't moved. It's much more volatile than shipping rates, but with shipping stocks, there's really it's I think the hardest industry to invest in because it's so dependent on shipping rates and shipping rates only, and the way they go up is not really so much demand, because there's always demand, because there's always going to be companies moving product from one port to another between countries. It's just the number of ships in the market. So when the number of ships gets low due to like scrapping old ships from wear and tear over the years, then rates start to go up because there's less supply. The ships are the supply. And then when these companies start making a lot of money, like Zim was, and paying huge dividends, what do they do with the money? Well, they give it to you, but they also buy more ships. So then the supply of ships goes up a lot. So that's when people start buying these stocks, when they're so high in price. But there's always going to be a pullback, and then it could last years. But this could be a good time. It went up 80%, but it might have some upside left because. But there's different. Like I've done videos on shipping. A lot is on shipping, but there's a lot of indexes to track if you want to track shipping rates. And there's one YouTuber who's really into it. Who does? I learned a lot about shipping from him. I can't think of his channel name, but yeah, it's a really interesting industry.
So let's talk about, you've done a couple of videos on a master limited partnerships, around, I guess, oil pipelines. And this is one of the videos I think you recorded and released this 3 days ago or so. MPLX, right?
Yeah.
And I really enjoyed the video. Nice work. It's a stock that's up 19%, and they pay this huge dividend.
Yeah, these MLPs, the average dividend is like 7% for an MLP, and some are close to 10%. And it's not like it's a one-time thing. They've been paying these dividends for years, decades. But they do move around. Sometimes they're 3-4%, but right now, but you have to understand the nuances of these things. So you probably don't want to put into a retirement account because you may get hit. I have
a question for you. So are these limited partnerships, are they allowed in a 401k?
Yeah, you could put them in a 401k, but with most stocks, you don't pay taxes until like you take the money out, but you might get hit with taxes even like, and any year you can get hit with taxes if it's in a retirement account. If you get more than 1,000 of dividends, it's called UBTI, unrelated business taxable income, because they're not stocks. It's not like a corporation that issues stocks. They issue units. So you're a LP, a limited partner. So it's kind of like you're part of the business.
Yeah.
So that's why
they've got a really nice chart. If you go back, let's say at the, worst point of COVID, it's really gone up nicely over time. And I really like that dividend. I'm looking at retiring at some point, and I want to have a really strong income portfolio. And this one really caught my eye off your channel. I really liked some of the fundamentals.
Yeah, I bought ET, Energy Transfer, which is similar to this MLP in the oil and gas industry, midstream companies, and I'm up 110%. I just, it's nice. You got to get, if you get lucky with the timing, because oil stocks are a bit cyclical. So if you time it wrong, then it may take forever to get your money back. But if you time it right, you can make a ton of money.
So I get oil companies, right? Because I worked at Chevron, my first job out of college. And so I understand oil prices will drive the values for like Chevron and Exxon. But let's talk about these pipelines, right? How are they dependent on that oil price when you're still going to move the oil, whether the crude is worth $150 a barrel or $80 a barrel, it's still a barrel of oil. So how does that affect these limited partnerships?
Yeah, if you watch videos on people talking about MLPs, and they'll say, "Oh, oil, they're not affected by oil prices because it doesn't matter what the oil prices are because they're affected on volume, like how much volume of oil they move." Right. But I don't think that's not correct, because if you look at the charts, I understand why they say that, but if you look at the actual numbers, it's not true. It's highly correlated. Can you show it? Can you compare? Is there a comparison?
Not on this one. Let me go to Google.
On Yahoo Finance, I always show a comparison. Like, pick any of them. You can pick that one, and then compare it to Brent crude or West Texas Intermediate, either one.
So here's Chevron versus that stock, and they're kind of tracking near each other. Chevron was a little higher with the oil prices,
and Brent crude it'll look exactly like that, because Brent crude is the oil prices for it's non-US, but yeah. Can you compare it to Brent crude, which is the price of oil?
I think I did the wrong one there. So Brent crude, which one here? This one, the future Brent crude right here.
Yeah, that one.
Okay, so it's not playing. It's not charting itself. That's weird. Okay, but I get your point. And Chevron really moves with oil. Yeah, I've owned Chevron for 30 years, so I totally can vouch that. Yeah, it moves with crude oil prices.
And these MLPs pay massive dividends. So sometimes they're like 8-9% for a year or two or longer. So you're getting a really big dividend, and you also get the volatility of oil prices. The thing is, the dividends, the taxes are higher. You pay generally ordinary income tax
on the limited partnerships.
Yeah, like similar to REITs, you pay the higher tax rate. But if you buy a Chevron and you own it for at least 3 months, you'll pay long-term capital gains, which is a lower tax rate. There are a lot of, it gets a little complicated, but with MLPs, there are a lot of ways to limit your taxes, because you when you own an MLP, you're kind of like, it's kind of like you and a friend starting a business together, and then all the income from the business goes onto your personal tax returns. It's like this MLP, all the profit, all the dividends you receive, you have to report that on your taxes, but you also report, losses or write-downs or depreciation from the MLP. It goes onto your personal taxes, so you can take those deductions. You can't do that with a regular. You can't say, oh, Apple lost 20 billion because they sold this company at a loss. You can't write that down on your taxes because you're just a shareholder of Apple or any of those companies. But MLPs, you can deduct that stuff. That they give you a K1 annually.
Interesting. So this was a comment. This is a coal company, Consol Energy. I don't know if you're familiar with it. And it looks like coal is really rallying. I know that utility stocks are really rallying. I think the story out there is that we're going to need more power because all these data centers are going to consume a lot of power, as well as everybody else is. I can't think of a household that doesn't have more electronics than it had 20 years ago. So this stock is really working. For the past year, up 58%, over the last 5 years, up 179%. Very nice. And this is coal, which I believe, so they have Consol Energy together with its subsidiaries produces and sells bituminous coal in the United States and international. Okay.
Coal, coal has, it used to be like a majority of our heating, 30, 40 years ago was coal. It's come down a lot. It's not used nearly as much. It's still used quite a bit, but it's not used nearly as much. So I always get a little concerned about like products that are kind of like losing
on their way out.
Yeah, like when you see a company that had like 50% of the market like 20 years ago, 40% of the market 10 years ago, 30% of the market this year, people will say, well, it's still 30% of a massive market. But if you wait long enough, it'll be zero. But I'm not saying, I just don't, yeah, that's my concern about coal, but it's, but I could totally be wrong because I'm not an expert.
I agree with you that there may be kind of a 1-2 year rally, but long term, especially in the U.S., you got to think, we're getting away from coal. I agree with you. So another viewer wanted comments on Dell. I know that Dell had a really nice rally recently. It's up 98% year to date. And 1 year, wow, it's up 226%. Man, what the heck happened? Dell
I was thinking of buying them too. I remember, I could say that about a million stocks, I guess, but I really liked it. It was between Dell and Intel, and I picked the bad horse.
But is this all hype and no substance, or is this really? Let's look at the revenue went down in 23. If we look at their quarterly revenue, let's see what it did in the quarter that ended February 2nd, 2024 versus the same quarter. Revenues went down.
Yeah, but look at cash flow. Let's look at cash flow.
That's fine. Let's take a look at cash flow. So we're going to look at the quarterly and then the annual. So free cash flow is $806 million. And a year prior was $1.9 billion. So it was more than double a year ago.
But what about operating cash flow?
Operating cash flow, and now we're looking at annual.
Okay.
It's been $8.6 billion from operations Year before it was bad, 3.5. Historically, like in 2019, it was 9.2. So it's not like they're setting any kind of record. It seems that, the data center build out is really a story that everybody's repeating. One of the things I hear about AI, and it might just be me, I could be off on this, but I would just put it out there. You hear like CNBC, Bloomberg, all these analysts talk about AI. AI is going to change everything. And that's a very easy way to say something without saying anything. I would like to hear some specifics. Like, okay, let's talk about the oil industry. How's it going to change oil industry? Give me a specific there. Oh, I don't have one there. Okay. Well, let's move on to another industry. Let's move on to another sector. There's a couple of examples that I think are going to work, right? Like call centers. Okay, I totally see that. You call into a call center, you're not going to talk to a human being. We were kind of on our way there. You've been able to chat with a company for 10 years. So that's certainly going to work. But I don't see make my head explode examples of, wow, that's really going to change things. But what are your thoughts on this AI hype? Is it overdone? Is it underdone?
It is the future. I'm pretty sure it's the future. The thing is, everything gets overhyped. If there's ever a controversy, like the president kissed some woman on the cheek, then you see that in the news for like months. He's sexist. Everything gets so overhyped. But this is exactly what happened when cars came out in the early 1900s. But more recently, when the internet came out, everybody knew, not everybody, but it was the future. It was going to change a lot of things. But who made money from it? Not many people, like Microsoft. There's only a handful that and they're trillion-dollar companies, but there's about 10,000 companies that faltered because it's not easy to monetize things. As people say, oh, it's so easy, you can make money. Sure, maybe you can make $5,000 a month, which is amazing. But to build a brand and have billions and billions of revenue, not many people did it well. And not many people will do it with AI, but there will be a handful of people. And who will it be? NVIDIA probably, because they don't really have much risk in the game, because they're just making it's kind of like Microsoft did it, because they don't have as much. They just make the software. I'm not saying that's easy to do, but like the companies making the actual computers, like the IBM, they haven't done that well because things evolved. The software is always going to be around, but well, who's going to benefit from AI? I mean, my bet. I'm Meta, and I think they set up their AI infrastructure years ago.
Here's what I would point to. Okay, is the internet's a really good example, because I lived through it. I was an adult. I was a college graduate. I got online. The first websites were bulletin boards, and they were like nothing like what we're doing now. And then after that happened, some huge companies were born. Alphabet. You had Google search now. Why? Because we had a connected world due to the internet. Wonderful. Meta. Well, you didn't have social until you had a connected world. You didn't have Uber. You didn't have Airbnb. And it can go on and on. And my point being is, we haven't even gotten to the point where AI has been built out. So once it gets built out, companies will be born, don't exist. We don't even know about them. And those are going to be really valuable. Right now, we're trying to pick on okay, well, do we think Dell is going to make it through this AI wave and be a big winner? Well, I don't see how, because they just, Dell, from my observation, they're a hardware producer. And their hardware is not that much different than Hewlett Packard. It's not very different than IBM's. It's not very different than, name that hardware company. So it's not like they have a special ingredient. I agree that NVIDIA over the next couple of years is going to make a lot of money because there's a big build out. They have something unique, which is the GPU technology that's better than others. So I think the AI thing, I'm careful with it because back in the internet days, I bought a couple stocks and I want to remember them just because I want to remember the lesson. Um, I bought Webvan and I bought like $2,000 of it, and I lost all my investment. They were going to do grocery delivery, and grocery delivery 24, 25 years ago. Okay. This was like ahead of its time. Now, obviously, groceries are being delivered every day. You got food delivery. It really works now. DoorDash is doing great. Uber is doing great. Instacart is doing great. But 24 years ago is ahead of its time. I lost my whole investment. And that's what I want to remember is AI is going to be tricky. I can't tell you if, which company is going to have that next experience app that's going to just take over, Alphabet's market share and everybody else's market share and become the next, Meta.
It's anytime these big waves come out, like there was the EV wave for a few years now. No one's talking about EV cars anymore. But people, there's for every person that makes a lot of money from these things, people who invested Tesla early and got out before it came down. For every person that like really hits a home run, like right. For you maybe 10,000 is a home run. For somebody else, a million's a home run. For somebody else, a billion's a home run. But for every person that hits a home run, that kind of moves up a notch in their savings or investment account, there's 100 people who were pretty much wiped out. So many people were wiped out in .com. So many people like EVs, like so many people who put NEO and all these. Unless you got Tesla early, most people buy things at the top. A lot of people get wiped out, and they never they don't go back in the market. A lot of people will get wiped out with AI. If you want to bet that as the future, but who knows really where to go? I mean, obviously in 2000, I did like I always said Microsoft is the best company. So I wasn't like it wasn't that kind of like crazy of a pick because they were pretty big at that point and they got even bigger. But who knows? Like I would never thought of Amazon because they were just selling books. I never thought they would be $1 trillion company or
no. Like a lot of they were. Their stock was near zero after the .com bubble burst.
Yeah,
but Bezos was the right guy, at the helm. He just kept them growing. So let me do a quick time check. How much more time you got, Scott?
Whenever I'm
12. You want to go another 12 minutes or so?
Yeah, that works. Okay.
So we got a request on the comments, Vertiv Holdings, and these guys I believe are building out, or they have infrastructure technologies, and I believe it ends up in data centers. So look at this chart, 863% in 5 years. Wow. In 1 year, 524%. Forget NVIDIA. Look at that. Wow. Awesome. Holy smokes. So let's see what kind of cash flow you would get for a $36 billion market cap company.
It's all hype because these companies don't really even make anything.
So you're burning. No, these guys are not burning cash. They're making $778 million in free cash. They were burning a year before. That's not bad. Okay. They are growing. Okay. They're growing. Not like parabolic growth, 20% growth. Okay. Look at the quarterly. The quarterly is not that impressive. So, I mean, if you're growing if your stock price is doing this, I'm expecting you're like NVIDIA doubling your revenue, tripling your revenue year over year. And I'm not seeing that. And this is a small company. They should be, if they're that red hot and their stock price is increasing that much, they should be doubling their revenue, which is interesting.
They're and I'm not. It's definitely, who knows, like what the next big, but there's so many companies like this that are trading at, they're probably trading at like 50 times free cash flow. So if you kind of missed the boat unless but I said that about Tesla too when they were trading at 1,000 times free cash flow. I was like telling people like, stop buying the stock, but it ended up keep going up to $1 trillion. So, is this the next big one? I don't know. It's really hard to tell, but right now you have to pay a pretty big premium if you want it.
So I owned Broadcom in 2023, and I saw their stock just take off, and I couldn't explain it, so I sold my entire position. I made a good gain, but I'm on the sidelines watching the stock go up another 30%, and
yeah,
it's not like it. How should I express this? Is I'd probably do it all over again, but I'm trying to learn the lesson. What's the lesson to learn there? Is maybe I didn't get my head around how much hype this thing was and how much further it was going to go. But I do give myself credit that, hey, I was, I guess, wise enough to buy Broadcom at a much lower price. I held it long enough to make a really good gain on it. And if it collapses, I could, stand back and go, okay, I didn't get greedy. I made my money and got out of it.
But we're never happy. If a stock goes up a lot, I'm still not happy because I didn't buy enough of it. And when it goes, no matter what, we're not happy. When it goes down, of course, we're not happy. So, and then when you sell it and it goes up, you're pissed off. When it goes down, you're happy. But you see, a stock goes up, triples after you sell it, and then you're like, oh my God, I'm such an idiot. And then it crashes. So you're like, I'm a genius. Nothing changed fundamentally. It's just market hype. So it's hard. And hey, I'm the same way too. So I'm not saying I can totally separate my emotions, but we have to just make the best decision we can. I have a lot of stocks that happen, it went up a lot. And I felt great. And then when it goes down, I feel awful. But in the long run, usually I do well. It's a few years out, things kind of come together. But that's all you can do is kind of like make the best decision you can. And
yeah. And I would say that, you buy 10 different stocks, and it's kind of like, I'm going to use a sports analogy. Like in baseball, there's never been a team in history that won 162 games, or that's what they play. Now, in a season, they're very happy if they win 60% of their games. Maybe, and if they won more than that, it's a phenomenal season. Now, if you pick a couple really great winners, just huge returns, wonderful. If 7 out of 10 of your picks are good, a couple of them are going to be superb winners. And then there's going to be maybe 3, 4 that are okay winners, and then one that's marginal winner. And you only had 3 losers, and you limited your loss on those 3 losers. You will make more money than you'll ever need. You don't have to be perfect. You just have to be wise enough to know that, hey, the story's changed on this particular stock. It's going down. I better protect my downside if the story changed. We're not talking about Meta in 2022 where all stocks were dropping. The whole situation was different then. I think you can do really well. Now, we've got about 6 minutes, and I wanted, one of the parts of this interview I wanted was, so we have viewers that are, from what I've observed, some viewers that are roughly 30 years old, 40 years old, and let's call it 50 years old. And if you're going to give just, you're riding in a subway car with a 30-year-old investor, and they are curious to, just ask for your advice. Like what's 1 or 2 things that you would leave that person saying, looking back, if I was in your shoes when I was 30, here are the things that I would want you to just keep an eye on, or maybe do, or maybe consider doing.
I think if I would have kept it even more boring, my investing, which I think it's pretty boring now, just do a fixed a few $100s, a few thousand a month, depending on your salary, and just put it into like the S&P 500, and not even read anything about the news. Like you'll probably do fine, do better. I don't even know if I beat it, I definitely, there was one point when I know I wasn't beating the market. I'm like, why do I try to pick stocks? Not only in the past year, like it went up so much, mainly Meta, Berkshire, and those went up.
You still there, Scott? Hey, Scott. I think we have a internet connection. Oh, here we go. You got cut off like 5 seconds ago.
Yeah, this goes in and out sometimes. I don't know why. But I think if you want to like make money, I think it's almost a guaranteed way is to keep it boring and just put a majority into like an index. If you're willing to take risks, and it is fun and you can learn a lot about the market, don't try to do it with more than 10% of your portfolio. But if you want to like invest in like, a penny stock or do options trading, but try to think of it as a long-term view, and if you can, not let your emotions get involved. I'm still trying to get that 10, 20, 50 bagger. But at this point, like, even if I made 100,000 on an investment, it won't like drastically improve my portfolio. Of course, I would like that, but like, don't.
So just to recap, a 30-year-old investor, keep saving and put it, in an S&P EFT.
Yeah.
All right. So let's move up to a 40-year-old. So now you're riding a different subway car, and a 40-year-old is like, hey, you're that famous Scott with Scott's Due Diligence. Can you give me a piece of advice? I'm 40. I want to retire when I'm 60. What do you got for me, Scott?
Well, I would probably, unless you want to do a lot of like analysis, if you're kind of just want to keep it simple, you have a fixed amount, pretty much anyone, and invest it in the market. The only time I would not do that is if they're within like 10 years of retirement. Then I would say you might want to just put into maybe half into the market and then half into into fixed income, something like that. But if you want to keep it simple, but I still think you should, like, if 10% of your portfolio, if you have the time, try to do a little digging into stocks, and you got to put your money into. You won't learn anything if you don't kind of invest in something. You kind of, if you sit in the sidelines and just follow a stock, you don't remember it that well. But when you put the money in it and then you see the ups and downs and you track the news, that's the best way to learn about it. And if you do get to a point and you're seeing better returns than the market, then yeah, put more than 10%, put 20, 30%. I don't put 100% of my portfolio in. Maybe half is in indexes and half I kind of like try to beat the market, which is.
All right, perfect. So recap, 40-year-old is, begin to balance your equity versus, I'm going to call it fixed income, lower risk, non-equity based investments. Now you've, on a different occasion, you got a 50-year-old. Hey, you're Scott with Scott's Due Diligence. Scott, I want to retire in 10 years. I've accumulated, a good 401k and a side brokerage account. What would you leave me with is kind of, if I was 50 and looking to retire in 10 years, here's something that I would want you to walk away with.
Well, that would be a little different. Just, we're in a weird time where you get a 4 to 5% return on the money market, which is so rare. But if emotions really take over, and I know some people like my wife sometimes, or you just can't handle ups and downs. Yeah, there's nothing wrong with putting it in a guaranteed 4 to 5%. And then if you want, if you don't trust the market, at least put like maybe 10% of your portfolio in. Because I think my wife is convinced now, because she was always like, don't do this, don't do that. but now she's, especially the past year, she's seen, because I had a lot on Amazon and hers, and it's gone up a lot in the past year and a half. So she's seeing, she's like, maybe I should start putting more into the. I'm like, yes, you should.
Nice.
I put everything in it. But I think it's pretty simple. You can invest in the market. The U.S. economy in the long term is always going to be strong. But if you really need money, I could see, because when I sold my company, I was like, should I retire? And I put the sale of my company, I put it into the market, and I'm down 50% in 3 months. So I'm like, okay, that didn't work out. I thought I could make money off of this. I'm losing my money.
Interesting. Very good. So that's good advice. Just really good stuff. Now, completely outside of investing, what's something new that you really like, whether it be a new streaming episode or a new product, a gadget you bought, or hell, you found a new restaurant and you love it. What's something new in your life that you really love?
It's something I mentioned on a stream that I know we're going to probably talk about off the stream, but I just started a job last month. I'm the controller at a real estate development company, and I'm really getting into it because I always, anytime you watch those YouTube channels, I don't know if they're real, but a lot of times people are driving Lamborghinis, and they say, so what do you do for a living? A lot of times they say real estate developers. And so I'm really learning a lot about that process, because I understood it from a certain stage, but I didn't know how they actually build the properties and like all that stuff. So I'm really learning. Obviously, I'm in the controller, so the finance part is my responsibility, but the actual structuring, build the structure and the different parties. So yeah, I'm getting really into it. It's exciting. But anything about money, that's kind of excites me, I guess.
Cool, man. Well, best of luck with your new job. I think you're going to hit a home run if you put in the kind of diligence and create the value that you've created on your videos. Let me thank you so much for being on this live stream. I really enjoyed it. Really loved having you on, and I'd love to do it again, whether it's your channel or mine. I think it goes into places that are really interesting, and I learned a lot. I hope people that watched feel the same way. And I also want to thank you again. I've been a viewer of your show for 4 years, so I owe you a lot for all the videos you've put out there. I always like doing my analysis, but then watching yours and then saying, okay, I might view the world a little different, might view a company a little different, but having that as an asset, as a library, is a big, big thing to have. So I appreciate it. So with that, thank you so much. Enjoy your weekend, and I'll be tuning into your channel for sure.
Okay. Yeah. Thanks a lot. I appreciate it. It was fun. Thanks everybody for commenting. And I'm sure you'll see me with Victor on his stream. And I know Victor has done my stream twice. I'm sure he'll do it again. And I think we kind of have a good banter going on, and hopefully it grows. And you sub to my channel. I'm sure Victor will leave it in the comments. Just Scott's Stock Due Diligence.
Yep. It's in the description, everybody. I have a link to his channel. If you're not a subscriber already, I really encourage you to do so. You'll learn a ton. It'll probably be one of your go-tos. And hopefully you guys all subscribe to Scott's Due Diligence.
Yeah, and vice versa. I know some people are coming from my channel. So subscribe to Victor. Okay. Well, enjoy the rest of your weekend, everybody.
Thanks, Scott.
Okay.
We'll see you guys.
See ya.